Hey guys, so welcome back to the channel, and the title of this particular video is the government isn't banning Bitcoin. Okay, so I've been getting into a lot of conversations lately about whether or not Bitcoin is going to be banned or not, and it's usually from people who really don't know a whole lot about the space, and they're saying that they've heard about the infrastructure deal and this and that, and how crypto was an issue, and how the government wants to tax it, and just a bunch of things. But really, a lot of people think that Bitcoin and cryptocurrencies are going to be banned here in the U.S. So I wanted to go over a few things really quick to let everybody know that that's not going to happen for a few different reasons. So these are just a few different reasons. So I have this article pulled up. JP Morgan to give all wealth clients access to crypto funds, according to Reuters. And if you Google this, if you Google JP Morgan and Bitcoin, and you're more than likely you're going to pull up these articles that are as of recent, that they are giving their clients, and I believe initially they're going to give their wealth clients, their private clients of the bank, access to a Bitcoin fund. So JP Morgan, the biggest bank, the largest bank in the U.S., is in the game. So for many years, Jamie Dimon, who is the CEO of JP Morgan, said that Bitcoin was for criminals, Bitcoin was for money launderers, and this and that, and how ironic, because those are mostly banks. For as long as I've been in the space, since 2015. He's said that, but meanwhile he's buying it he's buying Bitcoin in the background. But just like any other bank, they'll come out and they'll create a narrative to make you think they're doing one thing, and they're doing the complete opposite. So let's read part of this article real quick. I know the last video we made was on JP Morgan, but just to refresh your memory real quick, JP Morgan Chase will allow all of its wealth management clients access to cryptocurrency funds. Business Insider reported on Thursday, citing sources. The bank told its financial advisors in a memo earlier this week to take buy and sell orders from its wealth management clients for 5 cryptocurrency products effective July 19th, the report said. 4 of such products are from Grayscale Investments, and if you guys don't know who Grayscale is, I believe they are the largest crypto fund in the world currently. So check that out. Google that, Grayscale Investments. And one from Osprey Funds, according to the report. JP Morgan declined to comment on the report. Its advisors are allowed to execute only unsolicited crypto trades, Business Insider said, adding that advisors cannot recommend products but only buy and sell on behalf of clients' requests. So they are not allowed to solicit these products to their clients. They can only offer these products if the clients ask them about these products. So that's interesting. I wonder how long that's going to last. So if JP Morgan's getting into the space, I'm pretty sure they're not going to ban Bitcoin. Okay, but I could be wrong. I don't know. Let's go to the next thing. As far as that infrastructure deal, and I don't get into politics or much of that stuff on this channel. I try to stay away from that. But part of that infrastructure deal, there was a crypto piece in which the government wanted to tax certain felicitators of crypto. So I believe that if you are a platform that felicitates any buying, selling, or trading of cryptocurrencies, the government wanted to tax you. And they also wanted to tax developers of software within the space, and we did not want them to do that. Meaning, the crypto space, that was unfair for them to want to do that. So it was going back and forth. A few senators proposed an amendment to stop them from doing that, from taxing software developers, and it failed miserably. So. To my knowledge, they're still going to do that, but ultimately, not to get into too much detail about that. If the government put that into their infrastructure deal, as far as taxing, these crypto exchanges and facilitators of the buying and selling and trading of cryptocurrencies, then we've arrived. Then crypto is not going anywhere. Okay, there's going to be a balance between what the government controls and what the consumers are able to participate in. Okay, so as far as that goes, what side of the fence do you want to be on? Either you're accumulating crypto now, or you are going to wait until they settle all their quote unquote regulatory policies and accumulate then. Okay. My advice, and this isn't financial advice, what I would do in that situation, if I haven't already been accumulating for the last 6 years, I would start now. Okay. And that is not financial advice. So, title of this article from Fortune magazine: Senators reach a bipartisan deal on controversial crypto requirements in the infrastructure bill. Okay, so I'm not going to go through this article because it's probably very complicated, and it's simple. The government is going to officially tax cryptocurrencies, and we are here to stay. Okay, moving along. This particular article is from Cointelegraph, and the title of this article is 55% of the world's top 100 banks reportedly have crypto and blockchain exposure. Over half of the 100 largest banks by assets under management are reportedly investors in major crypto and blockchain technology-based companies and projects. So I can go ahead and name a few: JP Morgan, Goldman Sachs, Wells Fargo, Bank of America, BlackRock, Fidelity, and the list goes on and on and on. Global banking giants are reportedly increasing their involvement in the emerging crypto and blockchain firms by way of early and late stage funding for projects and businesses in the industry. According to research by Block Data, a blockchain market intelligence outfit, 55 out of the top 100 banks by assets under management have some form of exposure to the novel technology. This involvement reportedly cuts across direct and indirect investments in crypto and decentralized ledger technology firms by the banks themselves or via their subsidiaries. Block Data's research places Barclays, Citigroup, and Goldman Sachs, I forgot Barclays and Citigroup, amongst the most active backers of crypto and blockchain firms, with JP Morgan and BNP Paribas also identified as serial investors in the emerging space. Now, what's funny is when you hear a lot of this news, it seems like they just woke up one morning and they said, hey, you know what? Let's give Bitcoin a chance. No, that's not what happens. They've been involved in the background for years. Okay, they might just be making their announcements now. But a bank just doesn't, an organization just doesn't wake up and they say, hey, you know what? We're going to start selling Bitcoin. It takes years and years and years to build out these infrastructures to get things in line to do so. The research also shows crypto custody as a major focus for banks delving into the crypto space. Indeed, almost a quarter of the top 100 banks by assets under management are either developing crypto custody solutions or are backing startups that offer custodial services for digital assets. As previously reported by Cointelegraph, several banks in the United States, Asia, and Europe are building crypto custody platforms as part of their preliminary foray into cryptocurrencies. So you guys hear the term crypto custody. What that means is a place for you to hold your crypto. So right now, if you're listening to this video and you don't have your crypto on an exchange, most likely you have some form of wallet, either a hot wallet or a cold wallet. Okay. The large banks and the large corporations that buy a lot more crypto than we do, that hold thousands and thousands, maybe even tens of thousands of Bitcoins, right? They're not going to go and put all their crypto on a ledger, okay? They're going to go to one of these custody providers, and they're going to say, hey, you need to store 10,000 Bitcoin here. It needs to be protected, secured, and it needs to be insured, right? That's how they do it. So when you hear that a lot of these banks or platforms are developing crypto custody services, that's the market that they're looking for. They're looking for very large buyers of crypto, and they're offering a place for them to store their crypto. Okay, does that make sense? Okay, so anything else good in this article? No, I think that's pretty much it. So we'll just go ahead and keep this one short. Those are a few examples of why I personally think that crypto is here to stay. It's not going anywhere, guys. The government's going to make money. We're going to make money. We're all going to be happy. All right? So they're not going to ban anything. So don't worry about it. Don't lose any sleep over it. Anyways, I hope you guys enjoyed the video. Please like and subscribe and share this video. Really helps out the channel, helps me out. If you guys are on Instagram, please follow us on there of the same name, The Knowledge Supply Company, and we are also on Twitter. I'll put the links to those channels in the what the hell is it called? The box below, description box. Anyways, it's been a long day. You guys have a good day, have a good night, and I will see you in the next one.